Good afternoon and welcome to today's webinar, which is about how to get the best deal with your commercial landlord when negotiating a new lease, restructuring a lease and exiting a lease, which pretty much covers the whole lease life cycle. So today, my name is Louisa Sijabat and I'm a director here at Vincent's in the Insolvency and Reconstruction team. And I have with me my colleague Henry McKenna, also a director here at Vincent's, and Andrew Whitaker, who's also a part of our team, along with our experts for today from LPC, John Reed, Ken Lamb, and Adrian Gerber. So welcome.
Thank you.
Today, we'll be covering 6 main topics. Firstly, how do you know if your commercial lease is a good deal? How landlords think when negotiating, which we'd all love to know. We'll talk about guarantees. We'll also talk about what happens if we fall behind with our lease payments. We'll talk about restructuring, in particular in relation to online revenue. And we'll also talk briefly about refurbishment negotiations. So firstly, over to LPC. So how do you know if your commercial lease is a good deal?
Thanks, Louisa. I'll start this one off and be joined by my colleague Ken to answer this question. So it's really around having a lot of flexibility. And one of the best way to have flexibility is flexibility with your space. So having the ability to either contract some of your space or terminate your lease early is really important and is not an unusual clause to request from a landlord. So it really gives you flexibility, especially in these COVID times where potentially you may not need as much space, to have a contraction or an early termination clause. On the flip side, having the ability to expand with an expansion clause. So if your business is growing, you can negotiate in first right of refusals for particular space that enables you to expand into a neighbouring tenancy if the opportunity comes up. So yeah, it's really important to have that flexibility around space.
Well, thanks, Adrian. Look, a couple of other items that will provide you with the flexibility is having an option term or right to renew. So effectively, this provides you with an option for a further term in the lease without making a commitment now. What we often find most landlords will seek or insist on a option to renew, which is more favourable for the landlord themselves. For instance, we see cases where in order to determine the rent, the landlord will have a mechanism in there where the rent cannot be below the passing rent, which is what we call a ratchet clause. In order for it to be favourable for you as a tenant, we always seek for the market rent review provisions to be favourable for the tenant. This includes having no ratchet clause, so the rent can fall in a tenant's market, whereby the rent is determined. Whereby when they determine the rent, they also have regard to market incentives for new tenants. We often find that most landlords would typically provide a greater incentive for new tenants rather than existing or sitting tenants. However, if it does have reference to a sitting tenant, it would have to have reference to tenants that are actually restructuring the lease. Another favourable term for the option term is actually providing a cap on the option term or the option to renew, whereby you can have an agreement with the landlord where the rent can't be more than, call it 5 or 10% of the rent for the preceding year. Another clause within the lease is the utilization clause. Look, if this actually clause existed at the time or during the pandemic, most tenants probably would have actually found this to be quite useful. This clause will provide you, the tenant, with a rent discount during the term of lease where you're unable to utilize the premises for the permitted or for the intended use. For instance, as a result, I'll use COVID as an example. When there were the forced lockdowns, and if you are actually a retailer and you're unable to trade from your premises, If you had a utilization clause within the lease, the landlord would you would either stop paying rent or pay rent that's actually been pre-agreed with the landlord. Another example of this also, if you're an office tenant, if you're unable to utilize, if your workers are unable to access the premises, there would be some form of abatement provided to you as a tenant. Another clause that we find also is having an abatement clause or a commitment from the landlord to do. This allows them, if they're going to say they're going to do something, or keeping effectively the landlord committed in doing what they say. For instance, if they're actually going to, they say for a retail centre, if they indicate to you that they're going to provide air conditioning, however, the air conditioning fails during your core trading hours, there is a penalty for the landlord, and there is some urgency placed on the landlord to have this repaired within a certain period. If they actually don't repair the air conditioning within a certain period, the business actually stops paying rent until the service is back up and running.
Yep. So some other tenant-friendly lease terms. So make good. Make good is something that a lot of tenants actually don't think about at the time of entering into the lease, and it's a rude shock when they get to the end of the lease, because it's really a hidden cost in terms of having to either undertake the works to make good the premises could be back to base building condition. You could have to remove your fit out and repair any damage. Or you may have to agree with the landlord for a cash settlement, but it's a hidden cost, so it's an amount that you may not have prepared to pay at the end of the lease. But it's also the time, if you actually have to undertake the works, that time to do that, you're not trading, you have to, if you're relocating to another premises, you have to take that time frame into consideration. So when entering into a lease, ensure that the make good provisions are nil, and it's not an unreasonable request to make with the landlord. Rent reviews are something that, in most cases, the landlord expects you to pay a rent review, or agree to a rent review during the term of the lease. And these can be anywhere between, a CPI increase, or, maybe a fixed percentage amount. And some of the larger landlords even try to get you to agree to a CPI increase plus a percentage. And sometimes in those instances, you can be paying, 5-6% as an annual increase, which is really quite steep. So it's making sure that, the escalation is tied to what the inflation rate is, or a reasonable fixed rate. So when it's tied to inflation, that's CPI. A reasonable fixed rate would probably be around the 3% mark. Ken touched on this earlier with when talking about options and renewing terms and market rents, but incentives are a really important aspect at the moment, especially in these COVID times of landlords giving you an incentive to either renew the lease or to take a new premises. So it's really important to understand what's happening in the market, what the levels of incentives are, because you could be entering into a lease without knowing that and costing yourself some amount that could be provided towards a capital contribution towards your fit out. It could also be a rent-free arrangement, or you could amortize the cost equally over the term of a lease. So it's really important, as I said, to understand that and to have that negotiated up front. In terms of incentives, they do really vary across the different markets and locations. It's dependent usually on the landlord as well as what sort of the market conditions are. If there's a lot of vacancies, then landlords are more used to, or will be more willing to provide an incentive for you to either to renew the lease or to take on a new lease.
And maybe I'll just try and a summary comment there. I think the way the question reads, how do you know if your commercial lease is a good deal? And the last statement, which says a lease that supports your business, not hinders it. Two comments I'd make. The one is that to think through the lease and the term of occupation is very important. In other words, what would be a good deal through the whole term, including option terms, is the logic one should apply. And does the lease arrangement support the business through the option term? So take the time frame into account when you're challenging the clauses, and just remember that any lease is the product of a negotiated arrangement.
Thanks, gents. So, Adrian or Ken, from your experience, what do landlords think about when they're negotiating with tenants on payment plans for deferred rent or renegotiating the lease altogether?
So I'll take this one on. So just as an overview, I'll probably relate this question to the COVID period and the government code that was introduced. So the basis of the code in affected states is that 50% of the rent for the affected period, 50% of the rent was to be waived, and the balance would be deferred. So the original intention before it was introduced was for the rent to be 100% waived. However, landlords lobbied hard for it to be deferred, and therefore, what the result of the code was that it would be equally split between waiver and deferral. The issue with the deferral part assumes that life goes back to pre-COVID times the minute that either lockdowns are over or, for example, retail opens up. And in reality, and we're seeing that at the moment, that's not happening. There's been quite a lot of recent press articles and reports and surveys that have estimated that it may actually take up to 2 years to recover to pre-COVID sort of turnover figures. And in the CBD areas, that would take longer than that because of the real push for occupiers to adopt a hybrid working principles whereby staff are splitting their time equally between home and the office. So currently we're seeing more and more tenants needing assistance with payment plans due to COVID shutdowns affecting their businesses. Referring back to my previous point on getting back to pre-COVID times, and this is quite worrying, is that I think that tenants requiring assistance now is just the tip of the iceberg. I think it's going to get more and more prevalent next year, especially given turnover won't recover enough for tenants to repay rent deferral arrangements which they've entered into. In addition, many tenants in Sydney and Melbourne have been protected somewhat by the code that's been in place. And one of the biggest principles about the code is that landlords are not allowed to evict tenants at the moment. But this will end early in the new year when the code is due to finish, and we're already seeing quite a number of situations where, especially some of the major shopping centre landlords, are really starting to chase tenants quite hard for what their plan is in terms of repaying the arrears. So I guess they have an idea of who can and can't afford to pay the rent once the code is finished. So if we look at resolving payment plans from a landlord side, ideally they're wanting as much information, collaboration as possible from the tenant to give them assurance that the tenant's business is sustainable, they have a plan, and there's also an end date in terms of when those arrears will be paid by. So we've seen many examples where tenants just contact the landlord and say, I need help, without explaining why or how they plan to pay the arrears. And those types of requests are not being received favourably by landlords because there really isn't any plan behind it. So therefore, as a way of suggesting an approach to payment plans, if you're needing to pay off arrears, provide details of your turnover from the pre-pandemic times. And if you're affected by the code and especially in those sort of New South Wales and Victorian areas, you would have already provided that probably to the landlord if you were applicable to the code. And then on the flip side, provide details on the turnover for the past 12 months. And that really provides a story as to how much your business has been affected and why you need assistance. One of the other important things is to provide some evidence or steps that you've taken to promote your business during the pandemic. I guess landlords are wanting to see from tenants that they haven't just been sitting on their hands waiting for the lockdowns to end. They've been proactive about, say, for example, promoting their business on Instagram, social media. That is received very favourably by the landlord because it shows that you've got a real intent to get back to pre-COVID times and really invest in your business, if it's possible during that COVID downtime. Any evidence that you can put together around foot traffic reductions, again, will really put it back on the landlord to show them that, this isn't, the situation that you're in with arrears isn't due to, having a bad business or not performing well. It's really, it's been out of your hands. And there are some councils, I know the Sydney and Melbourne councils, do provide this info in terms of what foot traffic numbers, especially in the CBD, what foot traffic numbers are currently and where they were previously. Or alternatively, you can engage with if you're in a shopping centre, engage with a shopping centre landlord to ask them for that information, because it's really important in, again, showing the situation that you're in, that it hasn't been within your control. Also, being able to pay what rent you can now. It's important, again, that a landlord sees that you're trying to make an effort to pay what you can. So even if they're small amounts or they're sporadic amounts, show them that you believe, you understand the situation, you understand that some rent needs to be paid. Paying some rent rather than no rent, again, shows them that you're making an effort. Providing a business plan showing how you think you're going to be able to trade out of the COVID lockdown and where your business is heading in the next 6, 12, 24 months is really important as well. That you can show a landlord, when you think you will be back up and running. And I understand that is, for a number of retailers, it is a difficult question to answer. But again, to my previous point, what are you doing to promote your business? Where you're making your efforts to try and get it back up to that level. So it's important to have a plan and show them you're organised by. Also, a plan on when you can pay the arrears by. And what I'd say with this one is, don't say that you can pay the arrears in 3 months if you can't pay it. You'll get yourself into more trouble if you make a commitment to the landlord, you're not able to pay that, you fall behind. They're probably, at that point, they may think, well, this tenant doesn't have a sustainable business, and they might be more bullish on their actions then than they are. If you're still engaging with the landlord now and you're saying, look, I need 6 to 12 months to pay this off, I'm being realistic, again, show them what information you can. So by providing all this information to landlords, you're really showing them that you've given a lot of thought to your situation, you have a plan, and you're making every effort to remedy the situations. There are some situations that we're seeing where landlords will resist providing any form of relief. So for this situation, some of the things that you could consider doing are, if you have a clear plan for your business and believe that it is sustainable long term, you could look at potentially extending your lease by 1 to 2 years in return for some rent relief, or it might be, I'll extend my lease by another year if you waive my arrears. And there's obviously a lot of value to landlords from a valuation perspective of extending the lease. So that's a potential tactic you could look at as well. If your lease has less than 2 years to run, start looking for alternative relocation options. We talk a lot in our business around how time is important, how time can be used for leverage. So you can look at other relocation options, and landlords are usually much more prepared to provide incentives or larger incentives to new rather than sitting tenants, which is similar to when you apply for a bank loan. The bank will usually provide you with incentive up front, but unfortunately won't reward you being with the bank for a long period of time. Another option that you have is asking the landlord if they would agree to providing you with a turnover-based rent for a particular period. So you're basically only paying what or a percentage of what your business is turning over. So you're not overextending yourself. And then in return, you can agree to provide an upside of turnover over an agreed threshold for the same period once your turnover gets back to pre-pandemic levels. So there's some options there. Just in summary, in all situations, where possible, and I know it's difficult at the moment, but try to pay your rent on time. And this is really important because some leases will actually prevent you from exercising your options if you've been consistently in breach of your lease. So just make sure that that's a consideration in the background, that you're not wanting to be in breach of a lease. Obviously, this is an extraordinary period where there is some understanding from landlords, but it's really about communication, providing a plan, and giving the landlords comfort that you're doing everything possible to resolve the situation.
Thanks, Adrian. That's a lot of really insightful information. The next question for the LPC team is in relation to guarantees. Now, historically, landlords require varying types of guarantees included in a lease to reduce their perceived risk. But is it possible to sign a lease without providing a personal or other guarantee?
Yeah, thanks for that. I'll answer this question. Look, the answer is yes. It is actually possible to sign a lease without either providing a personal guarantee or some form of guarantee, depending on the covenant. Look, most or some landlords will indicate that providing a personal guarantee is actually a standard requirement. However, from our experience, it's actually not. It's really just landlord driven. Other forms of acceptable guarantees include a bond, security deposit, or a bank guarantee. The level of guarantee will depend on the level of risk the landlord is actually prepared to take. For instance, if the landlord considers you as a new business, as a higher risk, they will typically request a larger bond or bank guarantee. It looks similar to the COVID. It's actually up to you to educate the landlord on your business. If the more comfortable that a landlord will get around your business, the chances are it's probably likely that they'll be willing to accept a lower bank guarantee. What we find, landlords who accept leases without bank guarantees, look, that probably typically applies to more multi-site users or government or bank tenants. For instance, for one of our multi-site clients, they have over 40 or 50 stores, and given that they have a well-established and good track record in trading, all landlords are actually happy to accept no form of guarantee. If you're a single site location, it's probably more difficult not to provide the landlord with any form of bank guarantee. Again, it's a matter of getting the landlord comfortable with who you are as a business, where your projections are, to satisfy any concerns or risks they have around your business. Look, the bond there is really just for the landlord to cover any risks to the tenant in terms of defaulting. And look, in terms of bonds, it varies. It could vary anywhere from 3 months of up to 12 months, depending on the size of the tenant.
Thanks, Ken. Just tying in with that, if the choice is between providing a guarantee to the landlord and providing a bond or like a cash deposit that the landlord could call upon if there's default, what would you recommend?
Look, we'd always recommend providing the landlord with a bank guarantee rather than any other forms of guarantee. Look, the money is actually sitting in the bank, and unless they have a good reason to call for it, the money effectively is, call it untouchable, unless they can provide that you're in default or you're in breach of your lease.
Cool. Thank you for that.
Okay, so we'll flip this around that we'll get the Vincent's team to answer some of the questions. So the first one is, it's sort of related to what I spoke about, but a situation where as a tenant, I've agreed to a deferral scenario, but I'm in the second lockdown. I'm starting to fall behind on my deferred rental payments as well as my monthly payments. I'm really in a bit of a situation. What do I do? What happens if I stop trading? And what will the landlord do? So I'll throw it over to the Vincent's team.
Cool. Thanks, Adrian. I'll start us off. So if you're still paying off your deferred rent from 2020, which most people are, and then had a 2021 lockdown and had deferred rent under the 2021 code from there, what happens with the rent from 2021 and 2020 because of the 2021 lockdown? So there were two different sets of rules that applied to the 2020 lockdown and the 2021 lockdown. So if you had deferred rent from 2020 during the 2021 lockdown and you were eligible for deferred rent under the 2021 code, your first lot of deferred rent got put on pause. Now that's for the period that this 2021 code is in place, which was from late July 2021 and it'll finish on the 15th of January 2022. So your first payment plan would be deferred through that period, or whichever part of that period you're eligible for deferral for. But it is something that you'll need to think about coming into January 2022. Now, the 2021 deferred rent, I'm assuming that by this stage, given that it's late November 2021, most people will have either attempted the process and either been successful, somewhat successful, or not. But if there's any deferred rent that comes out of there, that becomes payable from 15th January 2022. And that has to be deferred over the longer of the remaining lease term or 2 years from there, as in through to January 2024. So what happens if you start to fall behind on those deferred rent payments, as well as your current monthly rent payments, Henry?
Thanks, Louisa. I think fundamentally it's important that a tenant understands whether their business is still sound and whether it's worth saving. And it might be that some parts of the business are no longer profitable, but other parts still are. So I'd say step one is to review the past financial performance of the business overall, and also break it down into its component parts. And with that information, go about making a forecast of how it's likely to perform going forward. And going forward, it might well be that the business is only going to be profitable or more profitable if there are changes to the current position. For example, if there may be large legacy debts such as unpaid taxes or rent that would drain the business of all its cash if they had to be paid in full. If those could be cleared, then that might be the difference between continuing to trade and deciding to close the business. Or it may be that the current rent is just not sustainable or justifiable given falling customer numbers in certain locations such as the Sydney CBD, which has seen significant reductions in customer foot traffic over the last 18 months. If that rent could be reduced, then again, that might be the difference between continuing to trade the business or deciding to close it down. Once you've got that information, you can work out a few scenarios for the future of your business and its cash flow. For example, if I could exit unprofitable leases, what would my cash flow look like? If I could clear my unpaid taxes, what would my cash flow look like then? If I could reduce my lease payments to what I think is a fair rent, what would my cash flow look like? Armed with that information, tenants can make informed decisions about whether they should begin negotiations with their landlord. And you can take those cash flow forecasts to your landlord and demonstrate that your business is only viable if things change. And if they don't change, your only other option realistically might be to close the business and liquidate the company. Most landlords will want to keep a tenant where they can and will be open to negotiations, but they'll need to see transparency around the financial information if they're being asked to take a haircut. As well as negotiating with your landlord, it may be that an overall restructure of the business is required, and a voluntary administration could be an option worth considering. Appointing a voluntary administrator enables a business to do a few things, such as disclaiming onerous contracts and leases, renegotiating leases and contracts, terminating unnecessary employees if you're downsizing, and clearing pre-administration liabilities. So in a voluntary administration, the owners of the business can put forward a proposal to their creditors that essentially sees the business streamlined and returned to profitability, and usually provides some return to creditors, but not all of what is owing. These proposals are quite often attractive to creditors, as the other alternative is that the company goes into liquidation, which sees the creditors get paid very little of what's owed to them, if anything, and they also lose a customer. So if this is of interest, business owners can contact Louisa or me about this option, as it requires the involvement of an asset registered liquidator to act as the voluntary administrator. Now, if after analysing the business and its cash flow under the various scenarios, it's deemed to be no longer viable, then what should a tenant do? Well, if you stop trading from a leased premises, it's likely your landlord will issue a notice informing you that you've breached the term of the lease. And not long after that, they're likely to lock you out of the premises altogether. So it may be worth considering relocating any valuable stock and equipment to another location before notifying the landlord of your intentions. You should, though, formally notify the landlord that the business is ceasing to trade so that they can start the process of looking for a new tenant. Making their life as problem-free as possible will mean the relationship can be terminated as amicably as possible. If they find out from somebody else sometime after the business has stopped trading, they may take a dim view towards how they deal with you going forward. And with that in mind, business owners should also ensure they're aware of any guarantees they may have given to suppliers. Ceasing to trade may mean creditors have a right to pursue you personally if the business and its company can't pay them. Creditors are more likely to pursue payment under those guarantees if the relationship has soured. If the relationship ends well, it may well be that the guarantees are not pursued, or maybe a fair payment arrangement can be negotiated. And then finally, most businesses will operate under a company structure, and when a business stops trading, the director of the company will usually be left with an insolvent entity. At that point, the director realizes the company is insolvent. They should appoint a liquidator as an independent person to deal with the company's remaining assets and to account the company's creditors. And again, here, Louisa and I can assist with this appointment as we're both asset registered liquidators.
Thanks, Henry. That was a really good summary. So the last part of potentially exiting a premises is it possible to surrender my lease early with no penalty? This was actually a question asked to us, as are a lot of these questions, by people in these scenarios trying to work out what's best for them and their companies. So the answer to this question, in my opinion, is that it depends. I have seen people exit leases early. It depends what people mean by with no penalty. There's usually some sort of financial payment involved. So firstly, it depends what the contract says, what the lease agreement says. Sometimes, as either Ken or Adrian mentioned before, there might be an early termination clause in there, and it might specify what amount needs to be paid in order to properly fulfill that early termination. Alternatively, it could be done by negotiation with the landlord, and I have seen this in on a few different occasions from company directors of different types of companies that I've been speaking to lately. So in some cases, it's a negotiation where the landlord retains the bank guarantee and potentially permits the business to exit at that point with no further payment required. This might especially happen if the premises are of a very desirable location and or if another tenant is lined up. Sometimes I've also seen an exit with an additional payment. So not the payment of all the remaining lease terms, but an additional payment of a few months to help sort the termination. And in that particular instance, I believe the tenant also agreed to leave what was a restaurant fit out in the premises as well, because the new tenant that the landlord had lined up was also in the food hospitality restaurant type business. So that would have been of some value to the landlord as well. It's definitely not a guaranteed outcome, but it's definitely worth asking, and especially in this environment, something to see if it can be negotiated, because if it can, that would close off any guarantee or personal guarantee risk, which is usually a major consideration for company directors, because if they have signed a personal guarantee, it can mean their family home is on the line. So definitely worth exploring.
Thanks, Louisa. The next question that I had was, so I'm negotiating a new lease, and the landlord is wanting to include my online revenue in my turnover figures. So what can I do in this situation?
Thanks, Adrian. I'll handle this one. So what we're talking about here is turnover rent, which is also known as percentage rent, which is a percentage of a business's turnover that a tenant pays to the landlord on top of their base rent. So basically, once your store or business sales reach the turnover threshold agreed upon in your lease, then a fixed percentage will be applied to the revenue over that threshold, and then that amount is paid to the landlord. Now, the definition of turnover sales will differ in each state or territory. So depending on the location of your premises, what's considered turnover will vary. This mechanism is more commonly in lease agreements for larger scale tenants in comparison to, say, a smaller single site or dual site tenant. The specifics of turnover rent are determined by the wording in the lease. So it's important that it is considered when you are negotiating and signing a lease. And then in that lease, it will include whatever the percentage is, and then also the revenue threshold that has to be met. In most cases, you would only pay the turnover rent if your turnover exceeds that threshold in the 12-month period. So the contentious area here is turnover rent, where there also is an online component to a business or a separate sort of online business, and whether the revenue from that online business is included as part of the turnover rent calculation. So there are a number of factors that come into play when considering whether online revenue should be included. For example, the corporate structure. So being whether your online business is traded through a separate entity to the entity that trades from your bricks and mortar store, which entity holds the lease, whether you have a specific leasehold entity or whether whether you have a single trading entity and it holds the lease. Also, where is the online business traded from? If you have a bricks and mortar store and it's quite a large store, and you actually trade part of that online business out of that bricks and mortar store, then that's a factor that could point to a landlord including that in your turnover rent calculation. But if the online business is traded from an external location, or you have a warehouse or a distribution center where orders are filled and they're not done in store, then this sort of indicates that it's a lot less likely that a landlord would be able to include the revenue from your online business in your turnover rent. So if you don't want your online revenue to be included, it may be beneficial to consider the structure of your business or consider a restructure of your business to separate out the corporate entities. So if you have your online business in one corporate entity and your bricks and mortar business in a separate entity. That sort of separates it out quite clearly. And then if there's only the bricks and mortar entity is on the lease, then it could be a lot harder for a landlord to rope in that online revenue. If you're unsure about your online business and whether your particular circumstances, your landlord may want to include your online revenue or question whether it should be included, someone like LPC is a great firm to reach out to. Otherwise, speak to your accountant, or you can ask us. So I just want to throw it back to the LPC team now and say, what is your experience with turnover rent in leases? And what generally do you find is a landlord's appetite to assess online revenue for the purpose of being included in turnover rent?
Well, I think the landlord's appetite. I think the answer to that question is fairly obvious, that it's in the landlord's interest to include online revenue in figures that get recognised for rental purposes. And I think what you said there, Andrew, is the correct way. You've got to think about how you structure the entity and how you also trade from the store. I mean, we're seeing more and more of our clients are changing their models, particularly on the retail side. Let's say from a large format model, reducing the size, and it's becoming more and more click and collect. So I think the way that you structure the online is very, very important. There's also the question, of course, of a dispute now while that person is in a lease, and you folk would be dealing with this in the Vincent's team, is a dispute over the recognition of revenue and how it relates to the rental being collected. And I guess that just needs a lot of logic and evidence applied to the determination of the rent.
Indeed.
Yeah, and just further from that, I think there are a number of leases now that actually refer to click and collect style purchases, and that is seen to be included in the revenue. But it's really, again, getting back to at the start of the lease, ensuring that you've got that clause very clear, and that works for your business.
Thanks, Adrian.
So the next question. The next question. My business has a number of shops, and most of these shops have a number of leases that are expiring in the next few years. They're also in need of a refurbishment. What should I do?
Thanks. So fundamentally, this will come down to what's in the lease agreement, because if you've signed the agreement, that is what you have to do. So working this backwards, if you're looking to enter into a new agreement or renewal of an agreement, this is definitely an area to consider because it can be quite a significant spend for the tenant. So evaluating something like capital expenditure is the same as if you evaluate any sort of capital expenditure. So having a look at how much will be in total, how is it going to be funded? So is it going to be funded out of existing cash flow of the business, or is it going to be funded out of financing? What is the impact? So if it's funded out of financing or even existing monthly cash flows, how much money each month is going to be required to pay that payment? So also having a look at payback period, over how long and how many periods, or how many months, how many years of trade or profit will it take in order to pay back that cost? So where is your break-even point? How much more money do you need to make, or how much of the existing money goes towards that refurbishment and refit? Other things to consider are the impact on profitability as well as the impact on cash flow, because sometimes a business's cash flow will vary throughout the year, and so what will happen to those payments through perhaps any quieter times of the year. Also, negotiations with the landlord. So is the landlord willing to contribute some sort of lease incentive towards the refurbishment? This is particularly if you're negotiating a new lease or a lease renewal. Or can that be deferred? So if you're up for a refurbishment now, but you've come through 2 years of hard trading because of lockdowns and COVID, the ability to speak to the landlord and say, can I defer that refurbishment for a year, and open up that conversation with them so that maybe you can defer the capital expenditure spending. Also, in terms of refurbishment, have you been putting aside some money or allocating some money towards it over each month and over each year? Or is it something that's come upon you and you now have to find financing for?
Yes, perhaps we can also ask LPC what they consider to be good refurbishment negotiations, what they include and what good results look like. John, would you like to answer that one?
Very much so. In fact, 2 parts to it. You've already highlighted the new lease, and Adrian did that earlier. And so it's always best to have a mindset where you are starting with the end in mind. And we do find that many commercial tenants, both office and retail, where they are able to secure an option in retail, that's not always the case, but don't thoroughly think through the works that will be required at steps in the duration of the tenancy. And the works that are required generally relate to refurbishment. So it's really important to think through that at the outset and to negotiate based on pure logic, to negotiate landlord assistance in the form of incentives at those points in the lease, which are typically the option terms and the renewals. That's the first point. The second is where our two businesses meet, and it's that horrible word, but important word called restructure. And so we deal with lease restructures, and what I want to highlight here is that in answer to the particular question we're dealing with here is in the current context of uncertainty, is you certainly don't, as a tenant, need to wait for a lease expiry to enter into negotiations and restructure. So our focus at LPC is very narrowly focusing on the workplace and on the tenancy arrangements and the utilization of the workplace. But of course, Vincent's is focusing on the business more broadly. And that's why I say this is where our interests meet. And the important message I would give is don't wait, don't delay, go early, apply logic. Everything is negotiable. And at the end of the day, the landlord is also dealing with considerable uncertainty at this point in time. And so there is an opportune time to restructure not only a business, but tenancy arrangements now, regardless of lease expiries.
That's fantastic. And thank you for that, John. All right. So as you've probably worked out, if there's anything that you have a question about for business restructuring, please don't hesitate to reach out to us. We'd be more than happy to talk to you about your individual situation. So I'm Louisa. You've seen Henry and you've seen Andrew on this call as well. So Vincent
Sorry,
says,
Louisa, it sounds like you're hindering. There is a question
yes,
that has come through. Oh, did you notice that? Okay.
Yes.
Okay.
I might do a little bit about Vincent and a little bit about LPC,
Right.
And then we'll do questions. But yes, we definitely haven't missed our question.
Okay.
Good to know. All right. So if there's anything related to business restructuring as a whole, or cash flows are difficult, or things are stressful and business isn't going quite how you imagined it would be, as is happening for many businesses, please don't hesitate to reach out to us. We would be more than happy to have a look at your situation and point you in the right direction of what options work best for you. I might get John to say a couple of words about LPC and what you guys specialize in, because we've loved hearing just that tip of the iceberg of your expertise today, and I suspect it goes much, much deeper. So why don't you tell us a little bit about what LPC do?
Oh, yeah, very briefly, the tagline there, getting tenants and occupiers the best result, is our focus is real focus is multi-site tenancies, but clearly many businesses and small businesses in particular might only have one site. And of course, we engage and help occupiers get a favorable outcome, either across a portfolio or individually. The assistance required is commercial insight, and there are many nuances in how to achieve favorable, or what we call tenant-friendly outcomes for tenants. So that's what we do. Commercial advice, helping tenants end up with what we call tenant-friendly lease arrangements.
And they're very good at what they do. And as you've probably seen from just the the tiny snippet of information that we've been able to share or have them share on this webinar. All right, we'll flip over to questions, which is much anticipated by John. So a question that's come in is, what are your suggestions if the landlord isn't keen on payment plans or deferrals at all at this time now that we have now been around a month since restrictions started lifting? Okay, so what happens when your landlord isn't keen to negotiate, basically? Should I just move premises and take advantage of competitive rents elsewhere?
I'll kick off there, and I do apologize for interrupting. I just worried you had missed this, Louise, because it's an important question.
It sure is. No, nothing to apologize for at all, John, honestly.
So, Alistair, I think the question, obviously, it's difficult to know the full context of that, and so I guess the answer in many ways is it depends, and so it seems from the way the question is asked, it almost seems as if you have what we would call a holdover rental or a month-to-month rental. I'm making that assumption from the way the question is asked, because the whole idea of just moving premises and taking advantage of competitive rents elsewhere is very much influenced by what's the implication of that decision for you and for your business. Is what are your lease arrangements currently? What would that require in terms of a new fit out? So these are the sort of the arithmetic calculations that one has to work for. What are the implications in your arrangements currently if you had to just move? And what's the implications from a relocation cost point of view? You need to work through that. But a couple of other points. The way it reads is if your landlord isn't keen on payment plans or deferrals at this time, the fact of the matter is that, really speaking, no landlord is keen, for obvious reasons, on payment plans or deferrals. It's not something that landlords would generally gravitate towards. But landlords are also dealing in a time of great uncertainty at this point in time. And the reality is that in most instances, the best outcome for both tenant and landlord is a recognition of the principle of sharing of pain. It's almost laughable for landlords to think that they could have the same level of assurance of income. Of course, it does apply in certain incomes, but the same level of assurance of income in the current circumstances where compared to the circumstances prior to COVID. And so I think that the answer here, it goes to what Adrian was saying. It's very well informed communications to one's landlord if it's important to stay in that premises, or if there are sort of obligations that restrict you from moving related to your current lease. It's very important to really get good business information, logic, market information, know your landlord, know their circumstances, to put together the best case for a enduring and sustainable outcome for both the landlord and the tenant. Now, there's a lot more to that, but hopefully that might help you. I would just mention to you that everything in leasing is negotiable. And if you've agreed to some deferral arrangement, there's nothing stopping one on the basis of evidence going back and saying, look, the agreement is just going to cause hardship that we can't sustain, and requesting a deferral to be changed to a waiver. I'm not saying it will necessarily end up like that, but there's nothing stopping one. No one can stop one asking and seeking an outcome which creates a sustainable business for both.
John, the only thing I would also add, that one of the things that we really stress to tenants is to really think of, before you're relocating is and John touched on this slightly, but what is your future of your business? What are your future business needs? Thinking about that strategically, because yes, no doubt there will be other sites out there that have cheaper rent. There might be landlords willing to work with you, incentives on offer. But I just tread a little bit cautiously in terms of that. You really need to try and understand what's the best location, what's the best location for my business, for my staff, for my customers, before making that decision. And that decision can sometimes take a little bit of time to formulate. So, it's really a considered approach before just jumping somewhere else.
And one of my questions to LPC is, what are you seeing in the market? What are you seeing as the opportunities for tenants? And is it, and do tenants have a reasonable amount of bargaining power at the moment, or not really? What are you seeing?
I think in some ways it depends on the market. It depends on what the area. Is one talking retail? Is one talking retail shopping centre? Is one talking retail in a suburban area? Is one talking industrial office? So in terms of industrial, generally speaking, is those markets remain as pretty tight, right? In terms of office and CBD, is clearly, and shopping centre, clearly there's a whole heap of uncertainty. And I think it would be fair to say that perhaps facing reality it comes quicker to the tenant than it does to the landlord, if you understand what I mean. Is landlords can still be protected by personal guarantees and all sorts of other stuff, but they will be concerned. Landlords where there's pressure on either one asset that they own or many assets that they own, they will be concerned about the what's happening into the future, the changes in the CBD and so on. So I think, Louise, the short answer is it does depend on the type of asset, it does depend on the location, and the landlord themselves. To know your landlord, I think, is very, very important. Good that tenants take the time to get to know their landlord.
Thank you. And thank you so much to the LPC team for contributing your knowledge and expertise to us this afternoon. So to John, to Adrian, to Ken, thank you very much. And to my team, Henry and Andrew, thank you very much. We hope it's been useful for people. Now, for anybody who is listening and wants to ask a question about their personal situation, but we realize that people don't always want to talk about their personal situation or have their personal situation talked about on a webinar to everybody else. There is a special offer of the ability to book a 30-minute complimentary free confidential consultation with either LPC or Vincent's if you mention this webinar. So please take advantage of that. We're people who all want to help, and so please don't be shy in reaching out. So thank you very much for listening. I hope this has been helpful to you, and that you can use some of the tips and knowledge that you've gained as you go and speak to your landlord the next time. Thank you.
Thank you, Louisa.
Thanks,
Thank you, everybody.
Thank you very much.
Bye-bye.
Thanks.